When it comes to being founder-centric, what guidance do you give for founders that might be contrary to what other VC groups, private equity, or family office might be sharing with them?
So again, when we got started in the early 90s, one of the things that we found that was really happening relatively frequently is the founders start the company, they come up with the idea, the capital comes in, the capital's much smarter in many cases, and they take over the company. And we were very specific in our approach that we were founders advocates. And because of that, what that meant was many times we actually disagree with the founder. We take a seat on the board, and that doesn't mean we're just going to be the rubber stamp of what the founder is going to say. Because a founder's advocate is someone that says, no, you actually shouldn't eat that third cookie. Maybe you're getting a little, chubby at this point, right? Or maybe we could say something that's out there that's not just the rosy projections, but it's actually the full transparency, and we set up the systems and structure so that investors get consistent feedback and consistent information. And so that's the founder feedback, and that's the founder advocacy that we do. It's also from the standpoint of, and there's plenty of times when the economy's taken a huge turn, that the best people to lead it through there is the founder. However, they have to have some guardrails. And in those guardrails, so if you've got a great employee and they've learned, you want to keep that employee. You don't want them to, have lost the $100 million on your dime and then you fire them and they go out and have their next success. You want them to be successful as long as they showed up with integrity, as long as they learn from those lessons. And that's how it is with founders. Founders are generally very eager learners.